Welcome back to 5 Min Smart. Today, we are dissecting a phrase that has sent shockwaves through Wall Street this week. It is abundance of patience.
That is right, Liam. The Federal Reserve has officially shifted its vocabulary. We are no longer talking about when rate cuts will happen, but why they are being pushed indefinitely into the future.
The latest Federal Reserve minutes revealed that the central bank is not in a hurry. They are citing a strong labor market and what they call sticky inflation as reasons to hold steady.
It is a fascinating shift. In early 2026, the market was betting on 3 or even 4 rate cuts. Now, the consensus is shifting towards 0. The Fed is basically saying they have an abundance of patience to wait until inflation is truly defeated.
And that patience is expensive. For mortgage holders and small businesses, higher for longer is becoming a permanent reality rather than a temporary phase.
Exactly. The labour market is the key here. As long as employment remains high, the Fed feels it has the cover to keep rates at these restrictive levels without crashing the economy.
But is it a trap? If they wait too long, do we risk a hard landing later in 2026?
That is the multi-billion-dollar question. Some analysts argue that this patience is actually a cover for the fact that the neutral rate of interest has structurally moved higher.
Alice, I think it is time for our signature segment. What is today's smart-sounding sentence?
Today's smart-sounding sentence is, the Federal Reserve has transitioned from data-dependent flexibility to an institutional abundance of patience, signaling that the structural floor for interest rates has moved permanently higher in the post-conflict global economy.
Institutional abundance of patience. That is a powerful way to frame it. It implies that waiting is now a deliberate strategy, not just a reaction.
Precisely. It is about managing expectations. They want the market to stop holding its breath for a cut that may not come this year.
Well, for our listeners, the message is clear. Do not wait for a bailout from the central bank. Adjust your strategies for a high-rate environment now. Please hit the subscribe button to stay ahead of these macro shifts. If you find our research valuable, consider supporting us through our Ko-fi link in the description.
Stay smart, stay ahead.
I am Liam.
And I am Alice.
We will see you tomorrow.